Stocks are up, the economy's down, and central banks are cutting rates. It's no wonder things feel confusing right now. If you're wondering how all these pieces fit together, this is the most important 5 minutes you'll spend today. In this third quarter review, we're covering 3 key markets, 2 surprising sector rotations, and the single biggest news story of the year so far.
Thanks, Glenn. Let's begin with the Canadian stock market, which has returned 16.28% year to date. The S&P 500 has done even better, up 21.85%. Meanwhile, the Canadian bond market delivered a more stable return of 4%. But here's the irony. Despite strong equity performance, economic growth is slowing. Central banks, including the Bank of Canada and the European Central Bank, have cut rates to stimulate weak economies. Still, the market is looking past these concerns, already pricing in future recovery. Can you explain how this plays out in the sectors?
Of course. Let's start with 2 contrasting sectors. First, let's consider financials compared to technology. Since rate cuts started, in fact, specifically since June 20th, financials in Canada are up almost 19%, largely due to expectation that loan losses from all those high rates will be less severe than initially feared. While lower rates have helped, the real driver has been the improved outlook for credit conditions. Technology shares, by contrast, have actually fallen 1.5% over the same time period. That's probably more about just investors rotating from overvalued tech into undervalued financials. Next, let's consider gold compared to energy stocks. Gold stocks saw strong performance since rates started to be cut, up 15.7%, largely driven by a weakening US dollar. You see, since it's become clear that the Federal Reserve would have to cut interest rates, the dollar has fallen, pushing gold higher. Strangely though, this hasn't helped oil. Energy stocks dropped over the same time period, over 4%, as global demand concerns weighed on oil prices despite the dollar weakness. This shows that while gold has benefited from dollar declines, oil remains tied to broader economic worries.
So, what's been the most significant market event this year?
The biggest story of 2024 is undoubtedly the reflation trade. It started with Bank of Canada's rate cut on June 4th, followed by cuts from the ECB and the Fed on September the 18th. But that was eclipsed by the bazooka-like stimulus news from China. On September 24th, China's central bank introduced a massive stimulus package aimed at kickstarting their slowing economy. This included aggressive rate cuts, infrastructure spending, and measures to boost domestic consumption. The result? A surge in Chinese stocks, with investors betting on a recovery fueled by China's enormous economic engine. While rate cuts in the West have played a role, China's actions have provided the major boost in market sentiment, helping offset the broader concerns about global growth.
That's a wrap on our third quarter review. As you can see, markets are reacting to rate cuts and China's stimulus, but the outlook remains uncertain. It's crucial to ensure your portfolios are well positioned for these shifts. If you'd like a second opinion on your investments or want to make sure you're on the right track, reach out for a complimentary portfolio review. Evans Family Wealth, our family serving your family.